Hiya traders, thanks for joining me. I'm going to talk today about primed recognition decisions. And, psychology is important in trading, isn't it? And anybody who's traded knows that psychology is important. So anything that can help you with the emotional side of trading is going to be valuable to you, and that's what I'm going to talk about today. I'm going to begin a series talking about emotions in trading, and the first thing I'm going to talk about is primed recognition decisions, or recognition primed decisions. These are decisions that are time pressured decisions, and so anytime you take a trade, it's definitely time pressured, isn't it? And they tend to be things that are complex in nature. So, people in emergency services have on-the-spot decisions to make that are not the easiest decisions to make. But by looking for certain specific signals, you can hopefully make the right decision. And that's the same in trading. Now, there are lots of different things when you're trading using technical analysis, as I do. There are lots of different things that you can and that you do look at that'll help you make your decisions. And so you need to prime the brain in order to be able to basically make the decision correct based on certain criteria, and you can do that every time if you are extremely well rehearsed in what you're doing. So you prime the brain through practice, and you can only practice priming the brain if you make the right decisions in the first place. So this is where it gets complex. You need to have a system that is extremely well tested, that has certain visual, auditory or kinesthetic triggers, if you like, that set off the decision making process. And in trading, they're going to be visual triggers. So visual triggers that are essentially the same in the past as they are in the present. When you have set your brain and practiced to make the decision based on those triggers, then you take the trade. And the way I trade, I don't make a decision on the spot whether to go long or short. That decision is only changed every now and then, because it takes the market a while to change from an uptrending market to a downtrending market. And so the trade decision is, or the decision in trading is, whether to trade or whether to just sit there and carry on watching, isn't it? That's the decision, and you have to have specific signals in order to do that. And that's what I teach people. And, I have a trading system called my Gold system that provides specific triggers for people to look out for. And when all the lights are on green, then there's a trade. And it's either long or it's short, depending on what's going on in the market at the time. But essentially, you are, you need to be primed to recognize certain triggers that make the decision for you. Okay, and that's a bit of automaticity, if you like, for the brain. And the brain is full of automated processes, whether you recognize it or not. You probably do. And these are the same triggers that, you may have experienced setting off a trigger to trade when there is no defined trade on the table. And they're the trades that tend to be less than a 50% winning ratio attached to them. So we at our academy like to take trades that offer a very high probability of success. So it's a question of rehearsal, and that primes your brain to only look for signals at certain times based on certain measures being fulfilled. It's like a tick box exercise. Is that in position? Yes. Is that in position? Yes. Is that in position? yes. And if you've got all green lights, then you've got go. And I look at context, content, and confluence, 3 C's. And when they're all aligned, then you've got a trade. And with my gold system, there are specific things that I look for in terms of context. And I'm going to give you an insight today on what the prime recognition decisions were that I made today. 2 market opens and similar sort of decision. And you based on what we've got behind us, we've got a chart and it's got candlesticks on it with EMAs, and based on that I can make accurate decisions more often than inaccurate. And so the other thing that you've got to bear in mind with trading is that the market wiggles and waggles up and down, and most of the time you could take a trade in either direction, but the reason that you don't, or you don't if you're a winning trader, is because you need to factor in reward and risk. There needs to be a good ratio of reward to risk, at least 1-to-1 for every trade. And the market is mostly in a situation where it doesn't offer that reward and risk, and therefore you have to wait for times when it does. So let's have a look at the charts. I'm going to talk you through the trades that I took today on the opens and talk you through some chart analysis first of all, to help you learn and help you start priming your brain. Okay, so you can make these prime recognition decisions in good time and make them accurately. Okay, let's have a look at this. So this is the DAX from this morning. 2 charts. One is the 5-minute chart on the left. On the right, you've got the 1-minute chart. And this is the pre-market action. As you can see, the market was going up for a bit and then started coming down. That's important because that is the hour before the market opens. And the market and the screen that you've got in front of you is exactly what I saw just before the open of the first minute of the DAX. So the market's been going down. This is the 5-minute chart. It's broken the trend line, the uptrend line, and the market has gone down below the 8 and the 20 EMAs that are crossing over here as we speak, as we look at the screen. And on the 1-minute chart, shorter time frame, of which I'm going to base my decision on, and again the market was going up and has now started down trending, which is a good thing and a good sign if you want to go short. Also, yesterday was a big down day and I got the impression that it hadn't quite finished, so I'm going to be looking, based on that going down, I'm going to be looking for short trades on the off. So we've got the 8 EMA below the 20 EMA on the trading time frame, and everything's looking good. It's making lower lows and lower highs all the way down here. And we've got a river of value in here every time the market has been to that river of value in the last 15 minutes. The market's rejected further down. And normally the first few bars offer good opportunity in terms of reward to risk opportunities. So I'll be looking to short the market. Now, when? That's the question. Well, if we just home in on this action here, the previous 2 candlesticks to the open have been 2 green candlesticks, but they've been very small really. And the close is right up against the river of value, the EMAs. It's right up against it. So it's in the perfect position right now to short. Perfect position to short immediately. However, I'm going to wait just for a second, hopefully. And the reason I'm going to wait is because I want to see a little bit of red. And when you get a little bit of red here, you should see the market go down quickly. And the reason for that is because it's in a downtrend and people are already looking to short, and based on the market, the actual indices going down yesterday, big style, and so it's basically the the market is primed to go down. It's gone up and it's going to go down, and hopefully you'll be looking at the market making these levels quite quickly, so giving up the gains that it's made in over the pre-market trading action. And so this is what I'm going to be looking for. I'm going to be looking for a tiny little bit of red, and then I'll be shorting immediately. The reason to look for a tiny little bit of red is just in case the market shoots up here before going down red. Obviously that would be unpleasant, and probably if I had just entered short on the open, that would see me into a losing trade, as I would exit the trade when it crossed the 20 EMA here. So we're just going to wait for the red to appear, and that means that the market is likely to attract sellers and go down. So let's have a quick look at what happens. Okay, and so that's the first bar. You can see the first 5-minute bar and the first 1-minute bar. The first 1-minute bar, obviously clearly red, and so the market, it didn't go up at all, hardly. It just came red straight away, and I was short straight away with my stop just above the 20 EMA. Can't see the values on here, but you're looking at probably 5 points for a stop and 20 to 30 points. I think it was a 30-point winner, this one. And so that's a good reward to risk. And I'd primed this decision by rehearsing over 10 years, but also by just, spending a couple of minutes before it opened, looking at what's been going on here, and all I was looking for, the only decision I had to make was based on when it went red, I just pressed short, or pressed sell. When it went red, that was all I had to think about. I was already primed, ready, and so, it's quite easy to see a bit of red appear. It's much easier than, say, looking for a number, looking for certain things to, 7 or 8 things to happen. I just look for one. So as the market is moving on throughout the day, I'm just looking for certain opportunities. So in the pre-market, let's just look. The market was going up, trending up, and came down. It came down to the river of value, stuck at the river of value, then went up above it, came back down, and that's along there. That's along there, potentially along there, and there's along there as well from the river of value. Then it went up, came back down, and there's no trade back up from there, of course. It's already broken the 80 EMA, no trade there either. And these are based on specific signals, things that you can't actually see on this particular chart, but that I describe in my gold system videos. And based on all of the things being equal, you should get a winning trade out of each one of these opportunities if you pay attention to all of the signals. And it's knowing the signals. If I woke you up at 4 o'clock in the morning and said, hey, what are all the signals for this gold system? The guys who've learned the system, you should be able to open your eyes and say, yeah, these are the signals, okay, and recite them to me. And if you can't do that, I'm not going to test you, by the way, but but if you can't do that, then you don't know the system well enough. And
the thing is as well, you know, when the market's going down, it's down here at the moment. What am I doing? Am I going to? This is the first candle. Am I going to short straight away again and hope that it goes down further? You can bet that I'm not, because even though it probably will carry on down a bit, it hasn't reached the lows here yet. Even though it'll probably carry on down a bit, there's no way of judging reward and risk in this scenario. The market's more likely to go up and then go down again, and so that's what I wait for. I wait for the market to hit the river of value. And let's have a little look at what did happen next. There you go. So the market put in a little green bar and then started going down again. Didn't make the river of value. So that's a primed recognition. That's, you know, on the open, a primed recognition decision. And actually, you got almost exactly the same opportunity on the Dow later on. And so it's this bit here, these two bars. When the market came down here, I'm hoping for in 2 minutes. I'm hoping for the market to be back up at the EMA with a little tail on the candlestick as it's got, and then I can short. I'm already priming my mind to say this is what I'm looking for 2 minutes before, and then I got it perfect. And then I shorted. And I've already done videos that show you this particular strategy and publish them on YouTube. And you quite often get situations like this on the open. And the key is to know when you've got a situation like this, are all the signals aligned? And when they're not, then you sit and do nothing, or you wait for signals based on another strategy. But we had the perfect signals here, and then it was a short. And so let's just play this video from here then. So this is basically what happened next. So bear in mind, I'm waiting for, on the 1 minute chart, I'm waiting for this to go back up to the 8 EMA, where I will then make my decision as to whether to trade. So we have to wait for a few minutes, and it's how the candles go back up that are important as well. How. That one didn't quite make the 8 EMA, so we wait until we get a candlestick that does. And this is looking likely now. So there, it's hit the 8 EMA. Where does it close? There. That's perfect for a short. Anything red and short. Waiting for red to appear. Waiting for red to appear. Waiting there. So that's a short from there. And you've got a very tight stop on this particular trade. This was such a good trade because the stop is up here, the entry is here, just a couple of points down, and you've already at this stage in the candlestick got probably 2 to 1 reward to risk, and it's likely to go down and touch this in a second. Still waiting, still waiting. And that was a good candlestick. That red bar is bigger than the green bar that was previous to it, and therefore likely to get follow through. Also closed nearly on its low, and the market's coming down. And now you've got 3 to 1, and an exit at any stage in here would be a good exit, basically. You've got candlestick lows that will offer support. And the reason that this was a good entry here was that you have 2 levels of resistance to higher prices. You had the high of this candlestick. Actually, you've got 3, because you've got the high of the previous candlestick, the high of the current candlestick, and the 8 EMA, and that went red, and that was a short straight away. So I wouldn't mess about here. That was already 2-3 to 1. You'd exit from that trade in there and then probably see it plunge down here in a second. But who cares, because you've had a winner. And at this stage, once you're out of the trade, you'd be looking for, does the market go back up to the 8 EMA? There, it did. So it was a good exit in the end. And I'm looking for, where does this candlestick close? Where does it close? If it's near to the 8 EMA, then we've got a similar trade again. So let's have a look. Didn't happen this time. Didn't happen. It just went red. Okay, and it's back up to the EMAs again now. So this is a potential bounce from the river of value in here, but I'm going to wait to see where this particular candlestick closes first of all. There you go. So just get it below the 8 EMA here and see where this candlestick closes. The thing that would just concern me slightly about any trade short from here is this big green candlestick here, and it's bigger than the previous red candlestick, and I look at, you know, charts in a lot of detail, and that would just be a little concern to me about a short. So at this stage, just pause this here. You've got a close below the 8 EMA. You've got a tiny, going into detail here, you've got a tiny little tail on the top of this current candlestick, and it's green. And then you'd be looking for a red there and short. Yeah. And a good risk to reward on that one as well. So it was short here, stop above the top of the candlestick, came down, went back up, but then it's gone straight down immediately on the next candlestick. And out. So now you've got new lows. And basically the day just continues like that for as long as you want it to, as long as the volatility is consistently high. You wait for the market to hit the EMAs, decide at that stage based on specific signals whether it's going to bounce from the EMA or not, and I have specific criteria for that, and you can see that was another perfect bounce and straight down. Again, it was a question of just wait, goes red, short, stop above the high of the candlestick, just above the high of the 20, or the just above the level of the 20 EMA, and then short, and you got 3-4 to 1 from that, reward to risk, and that's what you look for. So this is what I do. Hey, it's not that complicated. You just need to prime your brain so that you recognize what the market's doing so you can make the right decisions at the time. Do hope that you enjoyed that video. Thanks for watching. I'll catch you on the next one. Bye for now.